Okay, now as for the second requirement of part A, it says a calculation of the goodwill on the acquisition of Bike Light Company and what the balance would be at 30th September 2026 immediately before the disposal of the shares. So the company was acquired on 1st Jan 20x2, right? So you first need to calculate the goodwill, and then what would the balance be on 30th September 20x6? Your answer should include a calculation of the exchange difference on goodwill, all right, for the period from 1st Jan 20x6 to 30th September 20x6. All right, that's not an issue. That won't be an issue. Now, uh, this is the this is probably the the scenario from which you'll get all the information to calculate the goodwill and to further translate it to the dollar value, and the exchange gain or loss obviously would be the balancing figure. Car-based company paid dinar 100 million for 80% of the ordinary share capital of Bike Light Company on 1st Jan 20x2. The net assets of Bike Light Company at this date had a carrying amount of dinar 60 million. The only fair value adjustment deemed necessary was in relation to a building which had a fair value of 20 million dinars above its carrying amount. All right, so there you might get an excess depreciation and a remaining useful life of 20 years at the date of acquisition. All right, so that's obviously that will result in an excess depreciation. Carby's company requires non-controlling interests NCI at fair value for all acquisitions, and the fair value of the 20% interest was estimated to be 22 million dinars at acquisition. Due to the relatively poor performance of Bike Light Company, it was decided to impair goodwill by 6 million dinar during the year ending 31st December 20x5. It is bold. All right. Rates of exchange between dollars and the dinar are $1 is 0.5 dinar, so dinar is a stronger currency over here. Average rate year end 31st December 20x5 is first $1 to 0.4 dinars. 31st December 20x5 it's $1 to 0.38, and so on and so forth, right? And you're given the average rate for the 9-month period ended 30th September 20x6. Okay, so let's use the spreadsheet. We have the information in front of us over here. We'll probably need to switch to this sheet so that you get the rates. Now, as for a foreign subsidy, I've always told you guys to first calculate the goodwill in dinar or whatever the foreign currency is, right? What is the currency you're basically, whatever the presentational currency of the foreign subsidiary is, right? So in this case, let's say goodwill calculation, right? All right. So COI is 100, right? Just mention over here. All right, so I don't probably need to add a cell. You're not allowed to do that, I guess. Yes, you're not. All right, so dinar, oh sorry, I'm using millions. All right, so like now I'm pressing F2 to edit the cell. I cannot, right? I have to double click over here. Right, so 100, fair value of NCI is 22. Cannot do alt equals to, right? It won't calculate the, it won't, you're not allowed to do the auto sum, right? So that's 122. Fair value of net assets at acquisition, again, it's 60 plus you had 20 over here, right? So this, let's just say that, let me just, okay. So let me, why is my mouse? All right. Now, 60 plus 20 is 80. right? So now your goodwill, now this is a full goodwill, right? Your goodwill is 42, right? So this is 42 million dinars, right? And this goodwill is calculated, I would say, goodwill at first, so just for the sake of highlighting, just for the sake of, you know, putting it into perspective. All right, goodwill at first Jan 20x2. Now, impairment took place during 31st December 20x5, right? So I'll just use impairment, right? Of 6 million, right? So this is goodwill at 31st December 20x5, correct? Now, what I need to do is, obviously, I need to translate, right? At every point, so let's just say I'll do it over here. Let's say I take the exchange rate over here, right? Double click this so that the cell opens, and you will get dollar in millions. Okay. Now goodwill at first Jan 20x2, 0.5. This screen is actually a problem. Yeah. So 0.5, right? $84 million. This will be transferred at an average rate, which is 0.4. Right? And this will be translated at a closing rate of 3020x5, which is 0.38. Right? So I can change the format from here, right? Let's say I want the custom format, right? And I can use this format. All right, so this is what I want. Now over here, I'll get the exchange. Now I don't know if it's a loss or a gain, so I haven't mentioned it right now, but let's just calculate it. So this over here. All right, so you get a 26 million exchange gain, right? Because it's a positive figure. So again, I cannot press F2. That's a bad habit. All right. And now this is goodwill at 31st 20x5. Obviously, what I want is goodwill at 30th September 20x6, right? So again, this is right, so now we're here, goodwill at 30th September 20x6 will stay the same in dinar terms because there's no impairment, right? Or anything else. So all I have to do is convert at a rate of 0.35, right? So this divided by 0.35, which turns out to be 103. That means an exchange gain, because it's a gain, right, of another $8 million. So total exchange gain, right, that's 26 plus 8, 34, right? So total exchange gain, this is on goodwill, guys. This is on goodwill. All right. So now this will be obviously 80% will be allocated to the parent, and the remaining 20% will be allocated to NCI. Parent is what? Carbis and NCI, right? So this is the bifurcation. Now this is the calculation. The requirement. All right, guys. So we're done with part 2. Let's just see a calculation of goodwill and acquisition of bike company and what the balance would be at 37.26. Yes, I've told you that. Before the disposal of shares, all right, your answer should conclude a calculation with exchange differences. So exchange differences, right? You have it over here. Number one, that is 26, but the exchange difference that they specifically want is this one, right? This is the exchange difference that they specifically want. Now, moving on, you need to prepare an explanatory note, which obviously has an explanation of your calculation of goodwill and the treatment of exchange differences on goodwill in the consolidated financial statements. You do not need to discuss how the disposal will affect the exchange differences. Let me tell you what you need to explain exactly, because obviously you won't be explaining 100 million. There's no explanation for it. You won't be explaining 22 million. There's no explanation for it. But yes, you will be explaining this, right? So sorry, this is over here. You will be explaining this. Why is it not highlighting? So that's it. All right. So you will be explaining this. You will be explaining the impairment and its impact, obviously the rate at which it's translated, right? You will be explaining the exchange gain. You will be explaining this exchange gain, right? And you will be explaining this element, right? The bifurcation of the total exchange gain, right? Remember, guys, for the current period, 31st December 2026, the only thing that will reflect in your financial statements, which is obviously your OCI because it's IS 21, is this. This would be part of your equity translation reserve, if you remember, right? But this is related to the current year. Okay, so this will be part of your OCI. You make sure that you mention it because this is obviously something that needs to be mentioned. Okay, you need to mention it. So exchange difference of 8 million, right? It relates to the current year, which is obviously part of OCI, obviously will be taken to the translation reserve, and exchange difference from the previous period. Remember, you cannot just say that exchange difference of 26 million arose on in the previous period on, let's say, goodwill, right? How did you calculate it? What was the reason, right? So you have to tell them that this is because goodwill is translated at the opening rate and then at the closing rate again. So the difference is treated as the exchange difference, which will be taken to the translation reserve for the prior years, and for the current year, which is $8 million, will be taken to your OCI and the translation reserve, which is part of equity, right? The total gain of $34 million will be broken down, or will be bifurcated into 27 million for the parent and 7 million for the NCI. All right. So I guess this won't be 27 exactly. Yeah. So 6.7 and 27, right? So that's it. This is your part A. Okay. This is your part A. We will be doing part B and part C in the next lecture. Take care. Bye bye.